Let's start off with your expectations for Alphabet. What are you expecting kicking off the hyperscaler earnings and, the next chapter in the Mag 7 earnings?
So I don't have a lot of expectations for Alphabet, Frank. I think, ad is decelerating, search is decelerating. There's a lot of competition coming from Amazon's Prime Video ads. So I think what we want to do this quarter is just get through it unscathed and hear how the company guides for next year. The stock's cheap, there's no doubt. We added it to our value portfolio, so that kind of tells you all you need to know. But I think we want to listen for any kind of monetization of AI. What is the catalyst? I don't see one this quarter.
All right, you mentioned the stock cheap, 4P ratio of just under 21 times, trading a little bit lower than the market is right now. So really interesting. You're not expecting a big wow from Alphabet this quarter, but overall, the Mag 7 are really supposed to be pulling the market during this earnings season. So this is according to FactSet. Mag 7 earnings, 18% higher year over year. The rest of the market, the so-called S&P 493, just 0.1. So just give us a sense.
Right.
How much weight in your mind is this week on the rest of the year? We know this is a big week, but for the rest of the year, investor sentiment and everything else, with everything else going on in the world, we just hit on it, election, geopolitics, et cetera.
Yeah. Yeah. Well, so we were part of the tech faithful during the summer tech swoon when people were saying the trade was over, that AI was a bubble. So I think it's critical. I mean, it's about 42% of the market cap of the S&P is going to report this week. These names are continuing to generate free cash flow. They were put in the penalty box because of CapEx spending, and yet Microsoft is going to generate 74 billion. Google, for crying out loud, is going to generate 70 billion in free cash flow, and Amazon about 53 billion. This is after 40 to 50 billion dollars in capex this year. So I think you want to listen for AI monetization, use case expansion, cloud computing, continued growth, and margin improvement. And I think we'll get all of that in toto from the group. I'm just not convinced Google's going to be the star of the show this week. I think it's going to be more like the other names. Yeah.
All right. So you think it might be the other names, but I think really my bottom line question for you is, do we need to see a beat and a raise from these names to keep this rally going? Is just meeting expectations good enough? You hit on something else that we're all expecting, big jumps in CapEx spending that have been kind of weighing on some of these names, specifically Microsoft. So can we see a rally continue through year end without a big wow from these names?
Yeah, no. You need beats and raises. We saw that with Tesla, except on revenues, of course, they missed slightly. We saw it with ServiceNow, which I think is a great harbinger. And we know from corporate tax receipts that the earnings are probably going to be a lot better across the board in the S&P than the street expects. So these are the names you want to own, in my view, and broaden it out as we did in the summer. We added a position in NVIDIA, we added a position in AMD, and we expanded our position in Dell. So you want to be in the hardware names, but you also want to be in the hyperscalers and hold on, because I think we're early innings in this AI revolution, and I think it's going to continue for a couple of years.
Yeah, I think a lot of people are holding on out there. So Nancy, let me ask you one more question, and maybe you can settle it for all the investors out there. We don't know what's going to happen in this Fed meeting. We have a big jobs report coming up. We have a big PCE report coming up. We have a GDP report coming up that could be a market mover. Are these Mag 7 names? Are these where you want to be for defense? Are these defensive names? I mean, how do you view them? Are these actually growth stocks that you think are going to continue to power the market for, months to come, years to come?
Yeah, I think they're all of the above, Frank. You want to be in a decelerating growth environment, which, even though GDP is real GDP is excellent, remember that nominal GDP has come down because inflation's come down. So that you want to be in the names that can generate growth no matter what. These names have proven they can do that. So they're defensive growth names. And this is where we're hiding out with the majority. We're overweight the group in all of our large cap equity strategies, and we will continue to be. We're just broadening out the holdings. And I think it's a great place for investors, particularly the ones like Oracle that pay a good dividend, growing the dividend, Microsoft. Those are names where you can, they're not going to outperform every quarter, as we've seen from Microsoft this year, but they will continue to perform.